Pat Walker here with Mission Winners. It is Sunday and once again time to dive into the ETFs and max list stocks. This is the foundation, leading groups and leading stocks. We look for ETFs that are acting good. When we see one, we may buy the ETF, but it also helps us focus on potential stocks in that ETF group. And that helps us. And flip the coin, when you see one that's acting really bad, it tells you, stay away from the stocks in that group. Opposite sides of the same coin, but it's a coin that makes us money. So here we go. IBD 50, that's a bad pun. I guess that's dad humor, huh? Here we go. IBD 50, weekly on the left, daily on the right. And you can see distribution in the weekly and distribution in the daily. What does it tell you? IBD 50 is a great proxy for growth stocks, good growth stocks. It's a little weak right now. It tells us to be careful with growth stocks. Continue onwards. Gold miners ran up, tailed off on the weekly, tailed off on the daily, falling on a slight pickup in volume. It's not real good when a stock ETF breaks out and gives it all right back. All right. Perhaps it will base here for a while and lift off again. But at the moment, it says be careful with gold mining stocks. Move on. GLD, same situation. In fact, you had a gap here. Look at that. That's not good. Here's the reversal bar on the weekly also. Runs up and reverses down on a pickup in volume. Tells us just be a little cautious with gold and gold stocks, gold mining stocks. IBB, biotechnology, still hanging in there. Had a breakout from this base right here on increasing volume. See that volume pickup right there? And this is why, this is the perfect example of why we look at both weekly and daily charts. You look at the daily and you can say, yeah, I can see just a little base right here and lift it off. But then you look at the weekly and you go, oh, that's a long weekly base. At Mission Winners, we use these foundations to our benefit. And at the IBD meetups, this is what I taught for over 12 years, what to look for. Great template for everybody. Weekly on the left, daily on the right. Now it's just basing right here. Perhaps it'll get a liftoff. And what would it be getting a liftoff from? Right here, this is the 8-period exponential moving average, the yellow line. Get a bounce off of that. Watch and see what happens. Now, I want to go a little more education here. This is not a base breakout. It's a pullback setup. It is less reliable than a base breakout. So how do you control risk in a situation like this? If it triggers and you buy, just buy less shares. I'll be very specific here. We buy more shares on base breakouts. We buy less shares on pullbacks. I share that to help you. By the way, that's not textbook. That's real world. That's living off your investing profits. That's it. And that's what we did for, golly, a couple of decades. It was the only source of income was investing profits. And it was pressure, but it was good. Here we go. Oil and gas, it's lagging on the weekly and it's lagging on the daily till it starts showing some life across here. And I'll draw the line for you to help you. It's simple tops. It's nothing fancy. Needs to take that out on volume. Another very important lesson. Oh, it's a green bar on a good volume. I guess that's a good bar right there. Notice where it opened and notice where it closed. It closed in the bottom fourth of its range. It was met with selling. Tells us to be careful. You can also see it on the weekly. So be careful with oil and gas. Let's move on. Software technologies starting to roll over. I like this big cup and handle that it's forming here on the weekly. I'll draw this for you. But notice, there's some accumulation here, but there's also some distribution. It's below the 21 EMA. It needs to start lifting up in price before we'd even get interested in it. What's it say? What's it tell us? Be careful with software stocks. Oh, by the way, let me stop a moment to mention our Market Minute videos that come out every day after the market close. If you have not had a chance to watch one yet, last Friday's will be linked in the top right corner. Feel free to watch it and come back after to finish the video. Medicine, this is kind of like a poster child for the market. Ran up, breaks out, but note on this bar, how was the volume on that bar? It wasn't that heavy. And they gave it right back. That's kind of telling you what's going on in the market at this point in time. I'm not being bearish. And also, I'll share this. All this could change this week, folks. So that's why at Mission Winners, we are prepared every day with a good list of stocks, our key list, our shopping list. So right here, though, Tells you just be a little cautious with medicine. Lilly was a big chunk of that move, by the way. Okay, continue onwards. ITA, aerospace and defense, runs right back up near old highs. Cross here, runs up and gives it all right back. Same thing through on the weekly, big tail bar here. This needs to base out and lift again. Until then, be careful with aerospace defense. Be careful with that ETF. U.S. home construction still looks pretty good. This is a great example, folks. Home building, very responsive to interest rates movements. And as you can see, it's lifted up here, but then what's it done with the market? It's pulled back a little bit. But maybe this will base out, and this might find a good entry point this week. We'll watch and see what happens. There we go. S&P growth kind of lagging here, okay? Be careful with that. This is powerful information. S&P 500 growth index. There's not a lot of power here. It's saying be careful with big growth stocks. Good to know. Continue onward. Small cap had a great run, and then they gave it back. So we have to watch that and see what could be a potential buy if, and I'm not saying it will, it bounces off the rising ADMA with volume. But there is some selling volume in here. You can say, well, it looks pretty good here on the weekly, but yes, it does, but note where it closed. It closed in the bottom third of its range. So some selling pressure there. There we go. Tells us be careful with small cap stocks. Move on. Real estate's hanging in okay. Compare that to many that we just seen. Is there a real clean entry on this? No. This is another classic example, foundation. Real estate does well with falling interest rates. They're talking, right about dropping interest rates. And this is very home building construction, very responsive to interest rates, especially when they're dropping. And it lifted. Is there a clean entry here at this time? No, but it's something to watch going forward. Move on. Transportation runs up, and then they give it all right back. Big tail bar on the weekly. Be careful with transportation stocks. Move on. Airlines, stay away. By the way, team, we do this, and this is for everybody. We do this every day at Mission Winners. We make a video on this showing what to look for and what to do. You can see there's not much happening right here. Okay? What does it tell you? Stay away from the airline stocks. There we go. Leave them alone. Mid-cap ran up, gave it all right back. Did show some strength here, gave it back. It's a poster child for what's going on with interest rates and the stock market. Needs to base out here and start to lift again. Until it does, be cautious. And this is a pretty ugly tail bar on the weekly. Be cautious with mid-cap stocks. Home builders. There's another example. It's acting fairly responsive. Interest rates drop, home building stocks go up. There you go. Is there a clean entry right here? No, there's not, but eventually there might be. Got to wait and see. Oil services ran up, pulled back a little bit on increasing volume. Needs to base out here and then get another lift. Until it does, just be cautious with it. It's still good, though. Still good. Let me go back and show you. Here's the weekly. Doesn't look that bad. There you go. Let's continue. Excuse me. Let's continue onwards. Pharmaceuticals, kind of sloppy up here. Okay, look at the tail bars on the weekly. Little sloppy. Just be cautious with pharmaceutical stocks at this point in time. NASDAQ 100. QLD runs up. Oh, it's great. Oh, they knocked it down on heavy volume on that bar. Folks, that bar right there was a big warning sign. At Mission Winners, we took note of it. And that's why when this market started to pick up a little bit more, we weren't buying. And you can say, oh, come on. No, you can ask members. Ask the VIPs. Hey, were they buying? No, we weren't. And I'm glad we weren't, because then you get this. And we're just waiting. Needs to show some life. Until it does, be careful with NASDAQ 100 stocks. QQQ, same situation. Retailing, kind of weak here. Be cautious with retailing. Silver, stay away. I could actually say this. It's tarnished. Okay, I'm sorry. My kids would shake their head. My grandkids would shake their heads. Anyway, it's a bit tarnished here. Be careful. Steel, same situation, lagging. Be careful. Semiconductors, dropping down here. Heavy selling volume on that bar. It tells you, be cautious with semiconductor stocks. Let's move on. By the way, I have to stress, team, please, this is for everybody. I'm not Mr. Negativity. Good Lord, no. I'm the eternal optimist, but I'm also a realist. This is why we look at the charts. It tells us what to do, both buying, selling, sitting. Move on. Spiders lagging here. Notice this. Selling volume on the weekly, increasing selling volume on the daily. Tells you to be careful. And I really want to study this and point this out. It was rallying up. It was rallying up here on decreasing volume. Okay. And this up volume was less than the selling volume on this bar. It was set. That's what I told the VIPs. Hey, there's not a lot of power here. Be cautious. And were we doing any buying in here? No, we weren't. No, we weren't. It was, oh man, the market's going to town. Boom. Oh, it'll be all right. Boom. Boom. See that? On increasing volume, it just tells us at this point in time, and it did tell us when it was going up on decreasing volume. Be cautious. There you go. There's a good lesson for you. This SSO, same thing as the spiders, not much power there. Let it work through. Solar's lagging, leave it alone. It's below all the moving averages. Just leave it alone. That's all. There's nothing to do with it. Small cap runs up, and it was a fast run up here, folks. And then they give it all right back really fast. Okay. Now, it still could base here and get a bounce off the rising ADMA. So that's something maybe to watch going forward on TNA. I just showed you a bunch of ETFs that are down, way down here. This one's got support on the rising ADMA. Watch. Maybe watch and see if it gets a bounce. But remember, the market's kind of rough, so go smaller to control risk. Continue onwards. Oil, stay away. There's nothing good there at this point in time. Just leave it alone. Biotechnology acted decent, gave back some potential bounce here, but it did fall on fairly heavy volume. And I share this with people probably every week. Biotechnology, just be careful. It only takes one story for something to get spanked. Okay? So just be aware of that with biotechnology. It can spill across all of them. And I'm not saying it's going to happen, but biotechnology is a riskier area. So how do you control risk if you decide to buy? You just go smaller. Good investing is not one size fits all. We always take into consideration the risk in the industry or the risk in the individual stock security chart. There we go. Pulling back here, get a lift off the rising 8 EMA, but what will it need? It will need volume and a good market. We're about done, by the way. Home builders rallied up. Another tail bar here. It's pretty loose up here, but it did show strength on the daily and the weekly. It's something to watch going forward. Home builders. I'll say it again. Home building stocks, very receptive to interest rates movements. And in this instance, interest rates dropping, and this, got to see if we can find a spot for it. Materials. How do you build houses? You need materials. Well, this is hanging in okay too. There's no real clean entry yet, so we just got to wait on it. Communication services, there's nothing there. Leave it alone for right now. Energy's acting okay, but it's kind of loose. Let it settle down with energy. Financials ran up and tailed off here a bit. Pretty big tail bars in here. Still looks good. Maybe it's going to base here and get a lift on XLF. Something to watch this week. XLF. Industrials run up on good volume. Give it all right back. It's the poster child for the market. It says be careful, be cautious. XLK technology dropped. See pretty good drop on the weekly. Gap down on the daily. Some distribution in here. Just be a little careful with technology industry and technology stocks. There you go. Consumer staples ran up. Gives back. Here's a good lesson for everybody. Consumer staples, these are the things you need, okay? You can say, what do you mean you need? You need toothpaste. You need toilet paper, okay? Those are staples. I'm not saying that to be funny. There's things you got to have, okay? And it's hanging in okay. It's more of a defensive sector. There you go. So basing here, maybe it'll take off. And again, for everybody, this is weekly on the left and daily on the right. This is a great template. I developed this with a VIP, I guess it was the end of last century, late 1990s we did this. And it really helps us. Let's continue onward. XLU utilities, there's, it's kind of chopping around, a little slower, ponderous, really not much to do with it, but it's not dropping, so that's okay. Healthcare's kind of hanging in, as you can see through here. Let's move on. Consumer discretionary, still showing some strength here. Support on the rising 21 EMA, XLY, maybe looking at a couple of those stocks. You can punch up XLY and look at the top 10 holdings. Top 10 stocks. That will help you. Continue onwards. Metals and mining. You can see there's a common theme here. Overall weakness across almost every industry we're looking at, dropping. Okay. Metals and mining, not bad, but it needs to show some strength. Oil and gas, stay away. Retailing, kind of choppy here, be cautious. You look at the weekly, daily, and go, yeah, there's some tail bars, but then you look at the weekly. Whoa, tail bar, tail bar, tail bar. Tells you to be a little cautious. There we go. Software, lifted up, ran up strong, and gave it all right back. If things straighten up, though, this could be a one to watch going forward. XSW, X-Ray Sam William. Continue. IBD 50, back to the top. And this, again, is a poster child of good growth stocks. It's the IBD 50. They're good growth stocks, good charts. But right now, be cautious. Okay, so that was the ETFs. Now we dive into the MAXLIST stocks. But first, let me ask you, have you hit that subscribe button yet? We noticed that only about 40% of the viewers on our weekly videos are subscribed. If you have enjoyed this video so far, please hit the subscribe button. It is 100% free, and it helps us get more great videos to you. Oh yeah, the like button, also please do hit that. And if you have any questions, leave a comment below. Now let's get into the MAXLIST stocks. Apple has been really good to us through the years. We had buys down in here too. It was a good run. Sells into strength. Some selling right in here. I want to get rid of these little white bars here to help you. And again, weekly on the left, daily on the right. And it's been falling here, gap down, and there's some selling volume. And until it shows some strength, be careful. Now, what's the plus? And I think this is important to point out, and you'll see why I point this out. It still has support on the rising 21 EMA. That's positive. That's positive. We'll have to watch and see what happens. Maybe it will get a bounce. Something to watch going forward. And let's study this again. Support on the rising 21 EMA. Then you go to the next one and you go, well, that don't look so good to me. It's lost the 21-day and the 50-day. Yes, it did. So what does that say? It's weaker. It's riskier. There's no clean setup coming in on this at this point in time. So leave it alone. Leave it alone. By the way, you see that base breakout on the weekly? That corresponds to the, I need to point this out, corresponds to the base breakout on the daily. Notice the volume that came into it on that bar, the pickup. And here, we bought this. We bought this. When it started to stall up here, we were selling into strength. We were watching the action of the stock and the action of the indices, and it was telling us, sell some of the strength. Starts to fall, we sell more. Keeps dropping, we sell the rest. We made money on this. Not a lot. I'm not going to say it was a huge, but it was money, and good selling helped us make money. Because if we hadn't had good selling tactics, we'd have lost money, but we didn't. There you go. We teach rules and tactics all day, every day, real time, just to show it. Alibaba, there's nothing there. It's below all the moving averages. Look at the weekly, look at the daily, just leave it alone. BIDU, look at the weekly, look at the daily, there's nothing there, leave it alone. You don't have to overthink it. That's what I love. Google was good to us in here and here, ran up, started to get sloppy, and we sold it and we took it off. Done. There's nothing to do with it now. Until it starts to show life, just leave it alone. That's all. Meta, we owned Meta here. Rallied up, and then it started to fall, and we sold into strength. Kept dropping, and we sold the rest. The last shares we sold for a small loss, okay? And I'm telling you, we sold right in here, and I'm sure glad we did, because that's like 50 points. But we're out. We're out. And price and volume was telling us what to do. Here's another important lesson for everybody. This is a pennant formation right here. You can see it, these white lines. A pennant is a very useful chart formation. And when it drops out of a pennant, when it pushes through I'll back up. When it pushes through the top of a pennant with good volume, that is normally a good buy signal. If it drops out of the bottom of the pennant, that's easy for me to say. If it drops out the bottom of the pennant on a volume pickup, that is normally a good sell signal. Look what it did on this bar right here, folks. Look at the volume pickup. What were we doing? We were selling. We were selling. We made money on this. Not a lot, but we made money. The tactics helped us make money, and I'm telling you what, I'm sure glad we had the tactics, because, as they say in the movie, that's going to leave a mark. No, we're out. We're out. Made the money. Done. Okay. And by the way, not a lot of money. I'm not saying anything like that, but it sure the heck beats losing. There you go. The tactics work. Continue onwards. Microsoft started to lift up, but it was sloppy. Not a lot of power here everywhere. Nothing to do with it, so just left it alone. See what goes. Nothing to do with it now. Goldman Sachs broke out here. Look at the volume on that bar. They voted, and we were buying it. We bought more. Runs up, starts to stall. Big reversal bar here on fairly heavy volume. Sell into strength. This is a great tactic I want to share with everybody. Sell some into strength. Don't sell all of it. But when it starts to stall, not when it's going up, okay? When it's running up, just let it run. But when it starts to stall, sell some into strength. There was a trigger bar there. Runs up, starts to back off, closes below where it opens. That is a bar to say, I'll sell some. Again, don't sell it all, but sell some. It guarantees profits, but it also lessens risk. And it also, by doing that, lessens stress, which leads to clearer thinking. One of my degrees is in psychology, and I utilize these tactics to help lessen stress. You can't eliminate it in life, but we can have tactics to help lessen it. So that's where we're at with it right now. Okay, let's continue onward. Don't get sloppy with the stocks here. MasterCard, there's nothing there, leave it alone. Netflix was owned back here. Okay, it was owned back here too. Watch this. This was a good run. Here and here, runs up, sells into strength. Partial sells into strength, made us money. And if we hadn't and took it all the way back down here, we wouldn't have made money on those shares. We made money. Not a lot. Okay, please. I'm not saying that at all. But it sure the heck beats turning a gain into a loss. We didn't do that. We made money. And look at it now. Refresh that. We're out of it. There's nothing to do with it. Just leave it alone. And this is an ugly selling bar. Look at the volume on that bar. Be careful. By the way, you can say, why did that lift up on that day, Pat? On Friday. They had earnings the day before, and that was the response. However, the market was sloppy. Did we buy this? No, we didn't. VM and mission winners, the markets. I was just telling you, hey, be cautious. So we were. We listen to what the market's telling us. NVDA, we bought this back here. We bought this right here. That was amazing runs. We had sells into strength. We have, I do believe, let me double check. Yep, there we go. We have small shares left, but we had good sells into strength. And now we watch it. Now, if we owned it, up higher, we'd have taken it all out. But we own it from down in here and here, okay? So we've sold some into strength numerous times. We're in good shape. We will not get sloppy. If it keeps falling, we'll sell the rest. That's all. This is a very important foundation for everybody. Good buying and selling does not need to be an all or none proposition. You can ease into the stocks. In fact, Bill O'Neill talks about it on buying. You want to get to 100 shares. He talked about this at CanSim level 3s and 4s. Your goal is to get to 100 shares. Your first purchase is 50 shares. Your next purchase, if it continues going up in price, your next purchase is 30 shares. It continues going up in price. Your next purchase is 20 shares, 50 shares, 30 shares, 20 shares. We utilize the same tactics here, and I've used these for years, and it helps us with share size. Never buy a full position at one time. And please, I'll say it again, never argue with price. Price pays, not opinions. Here we go. There's NVIDIA again. Continue onward. There's NVDL, same situation. There's Tesla. I have to point this out. We love clean and simple bases. Why? They're easy to see, right? So if it's easy for you to see, and it's easy for me to see, and it's easy for others to see, does that not increase the odds that they will buy also? And the answer is yes. And isn't that what we want? Yeah, sure it is. I don't want to be the only. I'll never forget, years ago, I had a buddy of mine call me from California. Pat, I got the pattern. You know, he was pumped. He goes, man, look at this. And he shows it to me, in depth and everything like that. And I said, I'm not going to use his name, but I said, so, do you think other people see this? No, that's the best part. We're the only people that know about it. And I said, well, if nobody else knows about it, doesn't that mean they probably don't see it and they won't buy? And he gets really quiet. He goes, oh, yeah. I said, yeah, we want them to see. We want them to buy too, don't we? Yeah. I said, yeah, I think that's something we should really key on. So anyway, a true story, good buddy of mine. Anyway, so Tesla, clean and simple base buy, volume right there. I'll make this bigger so you can see it. Look at the base, volume pick up there, added to it, runs up. Okay, look at the trend. Oh, by the way, yeah, it's a MAXLIST stock, but note the simple base. It's vanilla. You could draw with a crayon. Don't do that. So it goes up here, and what do? We sell some into strength. You see that bar right there? That's a big reversal bar. It's a bearish engulfing bar. This bar here. What does that mean? It's a down bar. That's bearish, but it's engulfing. The range on this bar engulfed the range of the previous bar. It's a bearish engulfing bar. What do we do in a situation like that? We sell some into strength. We've sold several times into strength. We're in good shape. Now we watch it. We have price alerts set, and we'll watch it and see what happens. And it'll tell us what to do. But that's a good move. From, you call it 190 up to 260. Take that every day. Every day. So now we'll watch it and see what happens. Price alerts are set. It will tell us what to do. Visa, nothing there. Do a compare and contrast. Oh, that's pretty clean and simple base. Yep, I see what you're talking about, Pat. Ain't nothing there, is there? No, leave it alone. That's it. Well, maybe it's going to do something. Look for stuff. Let's be very pragmatic. We want other people to see what we see. Simplicity. It increases the potential. They'll see it too, which increases the potential. They will buy also. All right, team, that's our weekly review. Hope it helps you get a clearer picture of where the market's headed and what stocks to keep an eye on. By the way, don't forget about our weekly top stocks to have on your watch list video coming out tomorrow at 1 p.m. Eastern. If you're curious about what we covered last week, you can find the link to that video in the top right corner. Remember, these watch list videos are just a small taste of what our VIP members get with the daily key list videos on missionwinners.com. So if you're serious about finding those super performance stocks, consider joining us. Now, I'm curious to hear from you. What are your thoughts on today's market review? Do you have any questions or concerns? Feel free to drop a comment below. I love hearing from you. Thanks for sticking around for the whole video. If you liked it, hit that like button and subscribe to our channel. And remember, stay sharp, keep learning, and keep finding those winners.